Let's make grumpy old Larry Ellison happy for once and talk about his baby. And that is Oracle, the little talked about stock soaring to all-time highs in the back of its earnings beat, fueled by the cloud. Guess what? Oracle is now the best performing stock in the tech sector this week, and the stock has now also outperformed its cloud rivals like Microsoft, Salesforce, and SAP all year. Let's welcome in another voice, our friend Sarat Sethi, who joins Oracle. You own it. You have owned it for a while. You've been the oracle of Oracle, telling people to buy it. Why is it finally now starting to get a little bit of attention?
So what happened was you finally went from mid-single digits to high single digits growth rate. So what the company's forecasting now is on the higher end of 6 to 8%. This was something that they'd been saying for a few quarters. Nobody really believed them. The stock was trading at 14 times earnings. They've been buying back shares for the last 3 years. Now what you're seeing is this inflection point. The cloud is now growing high double digits. You're seeing license revenue growing. You've seen the management actually come out to saying that they're going to triple the revenue in the next 3 to 5 years. Along with that, this is a cash flow rich company. Margins were 200 basis points above what they expected, or what they actually told the street to expect. So you've got a company now that's re-rating. It's still trading at 18 times earnings, a discount to the market. But it was one of those show me stories, and it hadn't shown what they could do for a long time. So now they're finally in their element. And I think the room to grow is so much. And the beauty of this business is it's not all about stealing market share. This whole market is growing. And they have figured out now how to grow with the market. And in fact, if you look at their competitors, a lot of them have put together a lot of mergers, like the SAPs of the world. This is a one-product company that has grown from the bottom. So we really like this story. I think going forward, a lot of people have not been on top of the story, so you will see new attention come in. And now they've got to keep on executing. This cannot be a 1 or 2 quarter story. That is kind of the downside to this. But the upside is,
Well, very quickly, because do people understand what Oracle is, or tell us what you think Oracle is? I'll tell you why we say that. Oracle was a database company forever, and it still largely is. Databases, like we talked about earlier, the theme of the show is boring. Databases are boring. Recurring revenue, not a lot of growth. They have moved. They made some deals. Are they still primarily a database company, or should we look at them differently?
I think they are a database company with their growth drivers on the cloud and license revenue. This is the recurring revenue that's high margin business that over time, over the next 3 to 5 years, is going to dominate their business. You don't want to get rid of the database business. That is a cash heavy, rich business that's providing you the capital to grow in this other business. The key here, the difference is we've reached this inflection point. And that inflection point is that people now see them as a real player. They are getting new customers. They are growing. They're not just taking their current customer base and putting them on the cloud. Cloud is real. They are actually getting market share. They are not this small player anymore. They are in the game. And I think that's where people will now have to see and re-rate the stock to say, hey, recurring revenue business, inflection point, high single digits, maybe higher. And if they can execute, the stock will continue to do well.